Welcome back. Standing above the rest, ConocoPhillips bucking an industry trend last year. The stock rising 13% compared to a double-digit decline for the industry. And a big reason for the weakness, the sharp decline in oil prices. Joining me right now in a Fox Business exclusive is the CEO of ConocoPhillips. Ryan Lance is here. Great to see you, Ryan. Thanks very much for joining us.
Thank you.
And I think that sort of sets us up for our conversation because you've been able to buck a trend where the entire industry is saying the reality of the market is oil prices have dropped considerably in the last 2 months. How are you dealing with that?
Well, Maria, we've really embraced the volatility in the commodity price cycles. So we've told our team we need to work at $40 as well as we need to work at $80. So we've really transformed our company, reduced our cost of supply in the business, improved the balance sheet. We're looking at making investments that improve our margin and grow our cash flows, and importantly, be able to do that at $40. So we can fund our capital program at $40, and in the low 40s, we can fund our capital program and pay our shareholders through the dividend. So we have really transformed our company to embrace these cycles and be able to run at the low end of the cycle and take advantage of the extra cash flows that we get at the up end of the cycle.
And you've got to do that. That's why you've said you've got to offer investors both resilience as well to lower oil prices as well as participation and growth. You've been able to do that. So you kept capex flat. How long can you do that, though? Because your business needs the investment, obviously. How long can you keep expenses down, keeping capex low, before you actually need to start spending?
Well, our team, we have to embrace technology. We have to do the things that it takes to really drive the cost of supply of our business down so it works at $40 a barrel and below. And that's what we're doing in our business. So we're not funding things that don't have a cost of supply that will work at a $40 WTI price. And we're really doing those things around the world globally in our business using technology, driving the cost down. And we can sustain our production at less than $4 billion of capital for a very long period of time, for decades. And that's really that low sustaining price, low break-even cost for the company, low capital intensity. That's what's really required in our commodity business, where the supply and demand fundamentals are moving constantly. Geopolitical forces are having an impact on that, and it causes that volatility in the price.
Taking a step back, why do you think oil has moved lower? Is this just a supply situation in terms of the global market? You've got gasoline prices remaining steady in the low $2 range for several months now, and yet oil prices have come all the way down from the highs. What was behind that?
Well, I think, we look back and it's a well-supplied world. The U.S. is growing dramatically in terms of the technology that's coming to these unconventional plays in North America. That's driven a lot of supply back into the market. OPEC did cut back, and then they opened back up a little bit when the Iranian sanctions were put in place, but then some exceptions were put into the sanctions, so the oil come out of Iran stayed in the marketplace a little bit longer than people expected, so that drove an oversupply. Inventory started to rise back again, then prices started to fall to accommodate that now. Now we see, again, with another OPEC agreement in place, the prices have started to moderate it, and supplies have started to moderate just a little bit. Inventories are starting to back off a little bit. Prices have improved. But that's the volatility we see in the marketplace. It doesn't take much in the geopolitical realm to cause these supply and demand swings.
Tell me, in terms of your expectations for the market this year and the next year.
I
know you hate to predict where oil prices are.
I say we can predict them. They're going to go up and down and not necessarily in that order. But, what we're trying to do is run the company at a $40 to $50 world. So we've set our capital budgets based on flat $50 kinds of prices. And we say if we can work at that side, we think it takes those kinds of prices to satisfy the growing demand in the world today. When you look at OPEC, you look at the U.S., you look at all the other regions around the world, it's going to take those kinds of prices to satisfy that demand. But we're going to see fluctuations. We're going to see prices that go back to 60 and 70. And what I tell people is if we see those kinds of prices, be prepared, we might swing back to $40. That's why you have to work at that level.
Where are the big opportunities right now in the world for ConocoPhillips?
I think we're the advantage we have. We're in 17 countries around the world. We're a globally diverse company. We see advantages in Alaska. We have we had a great exploration season up there over the last couple of years. We see advantages in that. We're investing quite a bit of money in the North American unconventionals. We're one of the few companies that has an opportunity in all the major unconventional plays in North America. We're still big in Europe, in both the UK sector and Norwegian sector. We have a business in the Middle East, and we have a large business in Asia. And we're spending capital in all those areas, but I'd say a predominant part of our capital, half of it, is going here to North America in the unconventional
Of course.
plays.
Does the shutdown affect business?
We haven't been major impact yet today. We're still having conversations with the Department of Interior, EPA, the BLM. about our longer-term permitting and the things we have in front of them as a business. Now, obviously, if this carries on for a longer period of time, we're going to see some slowdown in that activity. Haven't been materially impacted today.
But the permitting, has that loosened up since the administration has decided to make this a priority in terms of moving things faster?
Yeah, certainly the regulatory relief in this administration has been significant in our business. It was necessary, it was needed. There was a lot of overreach in the last administration. Now we've gotten some relief. It's been the right thing to do. But I point out to people, we're not about lowering the floor in our business. We're about raising the floor and continuing to operate as sustainably as we can. We understand that's our license to operate. That is important for our companies to be able to demonstrate to all of our stakeholders, local residents, the areas that we operate in. That's very important to understand. They know our business and they know how sustainable it is and what we're doing to protect the environment.
Ryan, thanks for walking us through the budget. Really good to see you.
Thank you, Maria.
Thank you so much. Ryan Lance joining us, CEO of ConocoPhillips.